Hi there, you're watching Market Cafe on ET Now with me, Shriyansi Singh and Priyanka. Well, I know the next few minutes we'll get you a handover coming in from the Wall Street. Also tell you which stocks you should be taking a look at bright and early this morning. But first, let's kickstart the show by taking a look at the handover then coming in from the Wall Street. And it's a good one at that, Priyanka.
Morning, Shriyansi. Trump actually signed the order which he indicated on Sunday on tariff on steel and aluminium both. In US market, we saw a mixed set of cues coming in. Nasdaq fared high on the back of the chip stocks. Dow was in fact also up with a minor gains only. But then the session ended on a positive note. What we saw last week, that Friday losses let the whole week's gain go away. But starting Monday was a positive day for Nasdaq, especially the steel companies there. They were up the moon there yesterday. But tech names that led the charge. Nasdaq was up more than 1%. Futures were though lower, but yields were up ahead of the macro data. Now, two important key data which has to come this week. One is CPI data and the PPI data. And let's not forget, traders will also very closely watch the comments of Jeremy Powell, which is slated to address today in front of Congress. So, in set, US, strong set of cues coming in. Let's see if we are able to recover today or not. What about oil and gold?
Well, absolutely. It's a very good picture as far as oil and gold are concerned. Firstly, let's take a very quick look at oil prices then, because they're the ones that ticked higher, rebounding after declines that we've seen previously last week on concerns about a global trade war, even as investors also appear to shrug off US President Donald Trump's latest threat coming in, like Priyanka mentioned this time, on steel and aluminium imports. Then, when you take a look at Brent crude futures, you're looking at gains of just about 1.6%, well over that $75 a barrel mark is where Brent ended the trade. And when you take a look at US WTI as well, that's the one that climbed about 1.9%. That's the kind of handover that we had coming in even for WTI, but the market, of course, posted its third consecutive weekly decline last week on concerns about a global trade war. So quite the pickup that we're seeing there as far as crude prices are concerned. But we also have to take a look at gold and coffee as well, because firstly, when you take a look at gold prices, they're the ones to look at after that recovery that we've seen come in fact, building up off that particular rally that we've seen coming in after bullion hit a record high after and so it passed $2,900 an ounce after those Trump tariff threats also coming in, fresh tariff threats that the market is looking at. So quite a good move coming in as far as gold is concerned. And even when you take a look at New York coffee futures, they're the ones that are soaring 6%. So quite the week coming in even for coffee, Priyanka.
All right, so coffee futures also soaring. And let's see how the different coffee counters react to this news. But gold was 3,000 per ounce. That's the level gold is trading at. But let's get you all the key global stories. Kickstarting the coverage with something that's been sombering sentiment of late. That is tariffs. US President Donald Trump has gone ahead and signed an executive order that would now impose 25% tariffs, especially targeted at steel and aluminium imports. Now, the leeway is to be effective from March 4th. Remember, we started the week with rumors that Trump was in fact planning to impose the set tariffs, which then spurred a rally in the metal stocks across the board. But let's take a stock of what this means for countries then. The biggest winner, of course, will be the United States. Important to note that the steel imports in the country have slumped 35% between 2014 and 2024. Many attribute this to tariffs introduced under Trump's first administration. While that's that, Canada and Mexico, who are the biggest exporter of steel and aluminium, are likely to be hurt the most by these tariffs once they're effective. Germany too is a big steel exporter to the US and is likely to be negatively impacted by the tariffs. South Korea, Vietnam, Japan are also among the countries likely to see their metals hit with new import tariffs if Trump goes ahead, and now Trump has gone ahead with the policy.
Well, absolutely. Then let's keep it going with news and updates. Elon Musk is leading a group of investors in offering to buy control of OpenAI for $97.4 billion. In fact, the said offer is for the non-profit that oversees the artificial intelligence startup behind ChatGPT. However, in response, OpenAI chief Sam Altman writes, and I quote, "No thank you, but we will buy Twitter for $9.74 billion if you want." Musk then replied to Altman on X with a swindler, and in a reply to a different user then called him Scam Altman. So that's the latest coming in on that feud between Sam Altman as well as Elon Musk.
Okay, and moving on, according to our New York Fed survey, US public's near term inflation expectations were largely stable in the month of January, as respondents to the survey also predicted a notable softening in future spending plans. Now, the expected level of inflation at both the 1 year and the 3 year ahead horizons was unchanged at 3% for the last month, while the expected level of inflation 5 years from now moved to 3% from earlier 2.7%. That's in the month of December. January also saw the public predict bigger future price rises for food, gasoline, rent, college, and medical costs, while home price expectations increased to 3.2% from December's 3.1% mark.
Alright, then moving on, India has long relied on foreign military imports, but in recent years there has been a strong push towards self-reliance in defense manufacturing. Now, Defense Minister Rajnath Singh has made a bold commitment. India will develop its own fifth-generation fighter jet, with Aero India showcasing cutting-edge platforms like the Tejas, Prachand, and global giants, the likes of F-35 and Su-57. The question now arises, how close is India to making this a reality then? We caught up with former IAF pilot Augustine Vinod to understand the drawbacks then of single fighter planes. Let's go across and listen into a slice of that conversation.
5 years ago, if you had asked me this question, I would have said no. We don't need an FGFA. But today we need it because why China has it? And secondly, China has promised a couple of weeks ago, I was reading somewhere, it has promised that it will probably give it to Pakistan as well. Now imagine you have two enemies who will have a FGFA and you won't have it, and they could end up having an upper hand, and in situation which is going to threaten our national security. What is the problem with COTS or the commercial off-the-shelf FGFA that we are looking at? Both, I'm sure you will be going to Bangalore and looking at them, which is Su-57 and F-35. Su-57 is a twin-engine fighter, but woefully short on avionics and rest of the stuff that I talked about, extremely maneuverable, but may not be able to match that kind of avionics or a weapon prowess that an F-35 has. F-35 is a single-engine fighter. I mean, it has a Pratt & Whitney F-135 engine, but we have seen 3 crashes, and one crash was just 2 weeks before this aeroplane has flown into India. I am not a proponent of a single-engine fighter.
All right, that's the interesting conversation which we had last evening. But at the same time, we have India making tweaks in its budget to reduce some duties, especially for the motorcycles. But will it be enough to mollify the Donald Trump strategy, even as PM's US visit is just days away now? We caught up with the former ambassador, Ashok Sajanhar. Let's listen in.
This is basically to, in my view, to soften the ground. You know what we've done on Harley Davidson, what we've done on luxury cars, etc. Basically, I think sending out a message to the US that we are prepared to play ball. We are prepared to deal with the concerns. And I don't think this will be enough to satisfy the concerns of the United States, because basically, for Mr. Trump, it is the trade imbalance, trade surplus, that India has about $36 billion that, he's concerned about.
Rather than moving on, the PM has arrived in Paris to hold high-level talks with French President Emmanuel Macron then, and the two leaders will also be co-chairing the AI Action Summit today, where global tech CEOs will be discussing a collaborative approach to AI technology for innovation and the larger public good. In fact, we do have Sumita Curry joining in on the phone line with the latest details. Sumita, tell us a little more about what's on the agenda when it comes to this meet.
Yes, in fact, the Prime Minister landed a couple of hours back in Paris. He was given a very warm welcome by the Indian diaspora who's living in France. And of course, he's also tweeted about his meeting with the French President Emmanuel Macron. In fact, he also met with the US Vice President J.D. Vance as well. This is the first time that the Prime Minister and J.D. Vance have come face to face after Donald Trump administration 2.0 got elected to power. And of course, they were inaugurated. needed. Now, on to the agenda. Well, the Prime Minister is likely to attend the dinner hosted by Emmanuel Macron. This will be in honor of visiting heads of government and state. The dinner will also be attended by CEOs from the tech domain and a number of other distinguished invitees at the summit. Now, in terms of the AI Action Summit and what to really expect, well, India is a co-chair at the AI Action Summit, and remember this is coming in after India was a signatory to the Bletchley Convention, which happened in UK, which was another AI summit, and where all the leaders came together for a joint declaration stating that AI should be used responsibly, should be used safely, and there should be an inclusive aspect to AI, given which basically meant that it should involve and include everyone. Even the have-nots. And this has been essentially India's approach with respect to AI, not just AI, but digital public infrastructure as well. So India is going to be focusing on these aspects when the Prime Minister inaugurates that summit, or co-chairs that summit rather, with French President Emmanuel Macron. Then Prime Minister Modi and Macron will also hold discussions in both restricted and delegation level formats and address India-France's CEO forum. It is expected that OpenAI CEO Sam Altman will be there. He was on an India visit last week itself, and now he's going to be at France. And then, of course, there will be other global AI companies. There will be tech CEOs as well, like Sundar Pichai and some representatives from Meta as well. So we will be tracking all of those updates very closely.
All right, thanks very much, Sumita. Keep an eye. We will keep us posted on that. So looks like to build an inclusive AI ecosystem, that could be the priority for India. We stay for a short break here. When we come back, we get you the cues from Asian market and all the buzzing stocks. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. And Australia's ASX 200 is the one that is trading in the green at this point, 0.2% higher is where that one is on your screens as well. And when you take a look at Hong Kong's Hang Seng, that is also the one that is clutching on to a tinge of green at this point. 0.1% uptick is what you're looking at as far as Hang Seng then is concerned. On the flip side, you do have South Korea's Kospi that is down about 0.6% at this point. So not much to write about in terms of Kospi as well. 0.6% downtick coming in for that one. And even Shanghai is a little bit on the back foot at this point. Holding on to a tinge of red is what Shanghai is also doing at this point. 0.2% downtick coming in for that one as well, like you can see on your screens as well. Of course, Japanese markets are closed for a holiday. So nothing in terms of a handover coming in as far as the Nikkei is concerned. But other than that, back home, of course, we shut shop around the 23,381 levels. And a decent start is what we're penciling in at this point, because nothing to write home about as far as Asia is concerned, but nothing to complain about at this point, and a good handover at that coming in from Wall Street. So given all of that, a decent start is what is being penciled.
Okay, so that is what is, if you notice GIF Nifty, the implied, that has also expanded a little, as we are sooner to the opening now. But then let's get you the complete action-packed lineup that we have planned for you on TM ahead. At 9 a.m. we speak to Bharat Madan from Scott's Kubota to understand the margins were a little impacted, especially the agri margins were impacted. To understand the roadmap ahead, we keep pace with the earnings only at 9:40. We speak to Dr. Sunita Reddy, MD for Apollo Hospital. At 9:50, we do speak to Falguni Nair, founder and CEO for Nykaa at 9:50. And 10 a.m. We speak to Sri Rajendra Pratap Singh, Chairman cum MD for Nalco. And at 10:20, we would have Ravi Vishwanathan join in, MD and Global C, and along with him, the Global CFO for TVS Supply Chain Solutions on the earnings.
Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. And moving on to major earnings after market hours, then Apollo Hospitals is the one that reported a healthy third quarter set in a seasonally weak quarter. But when you take a look at occupancy, that remained below the company's guided range. In fact, Varun is standing by with the earnings fine print.
Well, so the results of Apollo Hospitals are in line with what we were expecting. A few numbers here and there, but if you look at the overall performance, it is in line with our estimates. Now, if you look at the revenues, they have grown up by around 14%. Profit has come at 372 crores. We were expecting 347 crores, so this is better than what we were expecting. The margins have come at 13.8%. We were expecting 13.9%. If you look at the internals, the healthcare service, they have grown by around 13%. The EBITDA over there has grown by around 14%. Also for AHLL, the overall business growth has been around 15%, and we were expecting the EBITDA to decline, the EBITDA margins to decline, but the EBITDA for AHLL business has grown by around 32%, which is a good sign. For Healthco also, if you look, the overall growth has been around 15%. Looking at the internals on some key KPIs, if you look at the occupancy level, they have been at 68% versus 75% for previous quarter, I mean the Q2 of FY25, but this is a seasonally weak quarter. So we were expecting the occupancy levels to come down, and it has come down in line with what we were expecting. For the RPOPs, it has grown by around 8%. Street was expecting a growth of around 3 to 4%. So the RPOP growth has been better than street estimate. Only one point of concern, that is the GMV for Apollo 24/7. It has actually been flat on a quarter-on-quarter basis, although there has been a rise of around 11% on a year-on-year basis, but quarter-on-quarter basis, it has been flat. So that's the only worry point. Otherwise, if you look the overall numbers, they have been in line with what we were expecting. And if you look at the internals, even they are in line with what we were expecting.
So a little weak set of numbers, but this was in line to the expectations. Thanks very much, Vansh, for the fine print. Moving on, now we have Ansh joining in to tell us about the F&O data. Now, Ansh, what we've seen is slowly and steadily, but FI's position, their long bets have been reducing on the index future. Looks like we're going back to the 10% level from which we expanded for some days only. Are there more short contracts that they've added?
That's right, Priyanka. But let's start with Nifty first. So Nifty extended its losing streak for fourth consecutive session. Also, if you can see in the chart, it has given a decisive break below that key 23,500 mark, indicating bearish sentiment in the market. Also, on option front, we are seeing most call writing, which was at 24,000 psychological mark, has shifted down to 23,500 mark, indicating strong resistance at the nearby level. Also, if we talk about Nifty Bank, then here also we are seeing bearish sentiment because the index has been declining for second consecutive session, and it has given a break below that 50,000 mark as well, and it seems to be taking very strong resistance at that 50,500 level. Also in index future, we are seeing open interest going up by around 2.5%, indicating short build-up. Now, if we talk about FI position, then yes, we are seeing longs getting covered by around 1,500 contract. They have added some short as well by around 9,500 contract, due to which the total long position has slipped below 15% from 16% directly to around 14.86%. Also, if you can see its historical trend, then it seems to be sliding down towards its 10% level.
All right, thanks Ansh for getting us that update. Let's also shift focus to another brokerage note then coming in. Morgan Stanley has added Bajaj Finance in their focus list in place of Reliance Industries, as it fits their quality large cap theme, and in fact has a tested model also. In fact, we do have Sharad who's standing by with more details on the key takeaways. Sharad, over to you.
Well, Morgan Stanley has a focus list, and interestingly, they have added Bajaj Finance, and there has been a removal of Reliance from this list. Now, they have stated that Bajaj Finance fits the quality large thematic space and has also a tested model and a good vintage business model which has been there. Now, also it appears to be a good play when it comes to the consumption revival in the unsecured loan space. Interestingly, they are expecting a credit cost to come down to almost 200 basis points in FY26, and the impact would be that an EPS growth outlook would be going up by more than 25% for FY26. Also, an interesting development for the stock is that the company would be a beneficiary of a higher middle class spends when it comes to the overall tax cuts which were announced in the recent budget as well, and also the impending interest rate cuts which would be coming in. And of course, recently also there was a rate cut after almost 5 years by the RBI. Now, the valuation, looking at it, that offers upside from current levels versus the history and the fundamentals. That's what Morgan Stanley is bullish on. And overall, on a recommendation basis, they have stated that large private sector, financials, consumer and industrial stocks and IT services would be something a focus area for.
Okay, so recommended the large private sector space. Thanks very much for those highlights from that note, Sharad. Moving on, we have Ria standing by to tell us the list of stock that could be buzzing in trade today on the back of earnings and the news flow. Ria, morning.
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. A lot of companies have reported their quarter 3 numbers. First up is Grasim. Now the revenue has gone up around 27% on a year-on-year basis. But this time around they've reported a net loss of rupees 168.65 crores versus a profit of rupees 236 crores. So a big cut coming in there. EBITDA has also down around 48% on a year-on-year basis, and the margins have also fallen very steeply, down 483 basis points, coming in at just 3.3% in this quarter versus 8.2% in quarter 3 of last year. There's also Nalco reporting its quarter 3 numbers. The revenue has gone up around 16.5% sequentially. Even the EBITDA has gone up more than 15% over the previous quarter, and net profit has also gone up around 50%. So good numbers coming in for Nalco. There's also MTAR Tech. Now the revenue has gone up around 48% over the previous year, and the EBITDA has seen a jump of around 40% over the previous year. Even the margins have actually slightly underperformed, coming in at 19.1%, just about, versus 20.2% in the previous year, and the net profit has jumped up around 53% on a year-on-year basis. So overall good numbers coming in for MTAR Tech as well. Signature Global has come out with its key operational updates for quarter 3 of FY25. The company has achieved its best ever 9-month pre-sales at 86.7 billion rupees, and the net debt has also been reduced to 7.4 billion rupees at the end of 9 months FY25 versus 11.6 billion in FY24. Shifting away from earnings though, Lupin will also be in focus since they have received an approval from the US FDA for a nasal spray. Shriram Properties will also be in focus since they have signed a JDA for a prime land parcel in Chennai for 3.2 lakh square feet saleable area with 350 to 400 crores of revenue potential. Lastly, also keep your eye out on Aditya Birla Capital since they have made an investment of rupees 100 crores on a rights basis in the equity shares of Aditya Birla Capital Digital Limited. So keep your eye out on all of these stocks today.
Well, absolutely, Ria. Thanks for getting us that update. But with that, it's time for a very quick breather on the show. When we come back, more news and updates on the other side, so don't go anywhere.
Welcome back. You tune into Market Cafe on ET. Now time to get you the earning update from Nykaa. It was an inline set of numbers for Nykaa in this quarter. Profit jumped more than 60%. However, it missed the street estimates. Loss narrowed in the fashion segment for the quarter gone by. My colleague Snehi joins in with the fine print and the brokerage's view on that. Snehi, of course, the kind of expectation we went into this quarter, especially after seeing the results it's posted in quarter 2, the expectations are really high. But on what all front did it miss the estimates?
Well, absolutely. Let's take a lowdown of what Nykaa's quarter 3 earnings look like. If you take a look at it on an operational basis, it's a largely inline set of numbers because you have revenue, EBITDA and margins that have come in line with our expectations. However, it's a miss coming in on the net profit. On the consolidated year-on-year basis, revenue was coming at 2,267 crores, which is an uptick of 26.7% year-on-year. We were expecting 2,270, so very in line with our expectations. EBITDA has come in at 140.8 crores, which is an uptick of 42.6%. Once again, in line with our expectations of 140 crores. What's not done well is the net profit, because while that has grown by 61.7%, it's come in at 26.2 crores compared to 16.2 crores. We were expecting this number to be as high as 36 crores. So on the back of that, PAT has not done well. And for PAT also, it's important to know that the deferred tax credit is slightly lower on a year-on-year basis. It's come in at 14.5 crores compared to 22.6 crores. So maybe that is something that has weighed on the PAT this quarter. EBITDA margin has come in at 6.2% compared to 5.5%, exactly in line with what we were expecting. Now, the overall GMV growth has come in at 25% on a year-on-year basis. We were expecting 27, slight bit of a miss on that front as well. If you take a look at the segmental performance, the BPC, which is the beauty and personal care, revenue has gone up 27%. We were expecting a 38% jump, so miss over there. GMV has gone up 32%, in line with what we were expecting. PAT has also gone up 36.2%. They launched 12 new stores and expanded in 3 new cities in the quarter went by. Fashion now, lastly, revenue has gone up by 21.3%, in line with our expectations. Net loss has also widened, so that's looking healthy for the fashion segment. It's come in at 25.4 crores compared to a net loss of 29 crores on a year-on-year basis. Lastly, GMV is the real outperformer when it comes to the fashion segment. That's come in at 1,130 crores, which is an uptick of 8% year-on-year. Now, the street was only expecting an uptick of 1%. So, this 8% jump is quite significant when it comes to the fashion segment. In a nutshell, we were expecting BPC to do well and fashion to be subdued. It's happened. It's the exact opposite, where BPC has been subdued and fashion has done very well for Nykaa. Overall, inline set of numbers, but it's a miss coming in on the net profit.
All right, then, Snehi, thanks for getting us that update. Then it was largely an inline set as far as Nykaa is concerned, but let's also switch gears to Eicher Motors to moat out then. And when you take a look at Eicher Motors, largely revenue and net profit have come in line with estimates. When you take a look at EBITDA and margins, they're the ones that have been a miss on street estimates as well. Srishti is standing by to do the number crunching. Srishti, while you do that, also tell us what the brokerage verdict also looks like.
Well, certainly. Firstly, on the results, it's been a slight miss by Eicher Motors, where the margins have come in at a miss because there was a one-time expense that did impact the margins of the company. Talking about the revenue as well as profit, those have seen a double-digit growth on a YOY basis and almost in line to we were expecting in. But EBITDA margin came in at 24.2% versus over 25% what we were expecting from the company. But the company does note that there has been an expense of 70 crores in the back of the new launches, and the ongoing festive season sales activities also impacted the margins by 90 bips. But the commentary is really positive, especially on the international front, where the company talks about the huge opportunity of growth in the America, APAC as well as Europe region. When it comes to their VECV, then the sales performance has been really good. 8.8% EBITDA margin is what the company has clocked in, did gain market share across the categories, and along with that, the company is also saying that going ahead in Q4, they are in for a good result and good industry growth is what VECV particular segment is looking forward to. Talking about brokerages, it's Goldman Sachs that has maintained its buy rating, but owing to the results, it has cut the target price from 6,000 rupees earlier to 5,900 rupees. Now, the volume momentum is expected to continue in Q4, but they have cut their FY 25 and 27 EPS by 5.4% due to the high marketing expenses. So that's the day coming in on Eicher Motors. Back to you.
All right, thanks Srishti for getting us that update then, but it's also Hindalco that could come under pressure after a weak quarter coming in from its US subsidiary Novelis, then which saw a decline when you take a look at the EBITDA and even the shipments in the quarter gone by, but the management still expects some relief. As far as the Q4 is concerned, we do have Ashesha standing by with the highlights then. Ashesha, over to you.
Well, yes, Novelis, which is Hindalco's wholly owned subsidiary, has reported weaker than expected set of numbers. Adjusted EBITDA has declined by nearly 21% on a sequential basis. Shipments have fallen by about 4%, and EBITDA per ton has come in at just $406, which is a decline of about 17% on a sequential basis, much weaker than what the street was working with. Now, lower volumes, lower scrap spreads and higher scrap prices impacted numbers in the quarter gone by, but the management is very confident with respect to the outlook going forward, especially for the fourth quarter, where they believe that volumes are expected to ramp up and scrap prices will also inch lower, because of which scrap spreads will inch higher in the fourth quarter. As far as companies' capex plans are concerned for full year FY24, they are expected to be on the lower side of what they had guided for earlier. But remember, auto demand continues to remain on the weaker side, especially on account of weak demand from China and European region. Aerospace demand also is on the weaker side, although management says can demand continues to remain very strong. It was strong in the third quarter and it is likely to remain strong in the fourth quarter as well. So yes, as far as numbers are concerned, numbers continue to remain weak. Remember, management had taken off their guidance in the last quarter itself, citing inconducive market conditions. But for now, numbers look weak. EBITDA at $406 is clearly on the weaker side. Management commentary, though, is slightly positive when it comes to the outlook.
All right, so Hindalco could see some pressure today in trade on back of these numbers, Shesha. But do tell us, how will Trump's hiked tariff impact the steel industry? He signed order, and this time there are no exemptions also in Trump tariff 2.0. How is this going to impact the steel and the aluminium industry?
After the news flow that came in yesterday, US President Donald Trump has now officially signed the order imposing additional 25% tariff on imports of steel and aluminium into the United States. Remember, existing rates of aluminium stand at 10%, which means it has been increased from 10 to 25%. And on steel, it was already 25%, which means that the rates have remained unchanged. But remember, when Trump had earlier imposed tariffs, there were exemptions on several products in several countries, which have now been withdrawn. Donald Trump clearly states there will be no exemption to any country whatsoever, and that's a remarkable change from what we had seen earlier, and hence this is going to be a big going to turn out to be a big trade war globally. As far as countries are concerned, remember Canada exports about 79% of the total imports of aluminium into the United States. And as far as steel is concerned, Canada, Brazil, Mexico, South Korea and Vietnam are the largest sources of steel imports into the United States. So these countries will clearly be impacted on account of the order that has been signed by Donald Trump. Now he has been very categorical. He says the steel and aluminium tariffs 2.0 will put an end to foreign dumping, boost domestic production and secure their steel and aluminium industries, which will be on the basis of the concept of America first. So big development that has come in. We had this news flow come in yesterday, but now he has officially signed the order and the entire sector in focus on the back of this.
All right, thanks Ashesha for getting us all of those important details. But as we wrap up on this edition of Market Cafe, let's get you some important commentary coming in from Kotak AMC's Nilesh Shah, who tells us where you should be parking your funds at this point, because he does see volatility continuing over the medium term.
In our opinion, while there are certain events which are behind us, there are few things which will keep market on the volatile side. One, we are in a world which is increasingly becoming protectionist from globalized, with Trump administration launching newer and newer initiatives for America first. There will be concerns on geopolitical side. If that event risk is not enough, we are also seeing consistent selling from FPI. There is ghar wapsi of global capital to US. We saw one of a large private equity fund going and meeting President Trump and saying that you had asked me to bring $100 billion. Here I am bringing $500 billion. Clearly, America first policy and higher interest rates, as well as high bond yields, is pushing capital back to America. And finally, emerging market today is like 1980s Indian cricket team. In those days, when Sunil Gavaskar used to get out, the hopes on rest of the batsmen was very, very low. Today, barring India, most other countries in emerging market like Russia, China, Brazil, South Africa haven't delivered return to investors. Over 20-year period, emerging markets underperform developed markets. So there is quit emerging market movement also happening. So in our opinion, markets are likely to remain volatile over near to medium term based on the geopolitical risk and also the flows.
Good morning, Mr. Shah. The shareholders are joining in the conversation. And did you, like the way you said, looks like there's a ghar wapsi when you talk about the FII flows going into the United States. What should investors back home do? Should they look at sectors where the valuation is at comfort at this point in time? Most of them talk about banks. That's also where you have a lot of FII positioning.
So for all along, we have always said, maintain your asset allocation. Don't invest looking at past performance. This is time to invest in quality over momentum, reasonable valuation over expensive valuation, as price is what you pay and value is what you get. And stay away from low floating stock counters where we believe froth is still there despite hefty correction. From a sectoral point of view, mid-cap IT companies leveraging AI to deliver cheaper, better and faster solutions to their customer. Private banks and NBFCs which are not overexposed to unsecured lending. On a portfolio basis, pharmaceutical sector which does get some benefits of a rupee depreciation. And telecom where there is hope of some price revision flowing into bottom line. These are some of the stocks which provide good opportunity. Thanks to the budget, giving 1 lakh crore tax bonanza, tax rebate to middle income taxpayers on a recurring basis, we think consumer discretionary space will do better. This set of people are unlikely to spend money on roti, kapda, makan or basic necessities, consumer staple. they are more likely to spend this money on consumer discretionary like travel and tourism, consumer durables, healthcare, education. So consumer discretionary space, thanks to the budget, looks interesting as this tax rebate is on a recurring basis.